1 2020 Dow Jones daily chart is right here. We're going to talk about that we tested all of the daily moving averages. And the ones that we tested that were very important was the 200-day moving average right here at 2625. The other moving averages that were tested that were very, very important was the 50-day moving average here on the Dow. You could see the wick come straight right back up. Late day, Friday, options, calendar, Friday expiration had a lot to do with that wick. And it did. So, the news is not good. And it isn't. The tech stocks that beat earnings on Friday, that event now is going to be past us. The Dow still has, even though that we tested the moving averages on Friday, we came down. That's typical. And particularly that 200 daily moving average that we undercut. And they came in using the algorithm and got it above it. But let it be known that the Dow still has a daily sell signal. And it does. So when we move over to the weekly, we take a look at the weekly very carefully here. And we tested the 10-week moving average right there at 26,000. The Dow hold. Yeah, it did. Then it got back above the 20-week, which is a very important thing. And so the weekly chart does look better than the daily. We tested these moving averages, very significant for these markets, particularly in that Dow that has not outperformed yet. On the monthly chart, we were undercutting a major 10-month moving average right there on the blue line. Right below that blue line is a very significant 50-month moving average that the Dow is sitting on and teeter-tottered on. Let it be known. And let this be known that the March lows with the up month and the 4-month rally ending July 31 is over with. COVID cases are exceeding worldwide, much bigger than what they originally were when the whole damn thing started. And just let me just say one thing very clearly, is the monthly MACD sell signal is still upon it. Yes, it's increased and gotten so much better. And yet we cannot take out the highs. And I keep talking about it over and over and over and over again. And until these highs are taken out, 26,900 will be the first one. We need to take out the 27,500 up here. We have failed every time. We have a lower monthly high, and it's right here on the Dow. And it sits just like that on monthly key moving averages. Back to the daily. Back to the daily. Typical. You come down on major moving averages, you test them, they bounce off support. Amateur textbook. Common. Let it be known. And what that tail wick shows is how that late money came in on Friday expiration. That was yesterday. And there's a lot of data out here. Do not be fooled. And do not be fooled about 3 tech stocks that went flying through the roof with back-end quarters with the pandemic and stay at home, and how the internet has changed, and how there are 2 economies. You have a new digital economy, and you have the old line economy, the old economy that we knew it before the pandemic. And then now we've transferred over into a digital world, a work from home world. Lots of stocks, DocuSign, up big time. Lots of these things that have happened in the last 4 months with this pandemic and how business models have changed and emerged for the better, for the good, for investors. For the new people, though, and even for the seasonality ones, you better be careful. We do have a seasonality. The bigger earnings are passed us by. Yes, we do have some more earnings that will be coming out. They're not going to be big market movers. One of the things that I will update today is how they shot Amazon up to the highs and dropped it $100 off of the highs off of that earnings report. Then I will do the Apple 4-to-1 stock split and why people are, once again, exuberance. That's part of the market, and the market is ahead of itself. I will be updating that NASDAQ 100, but we'll conclude with the daily sell signal on the Dow. We'll conclude that we tested major daily moving averages that got a bounce. We'll conclude the weekly movement for now, that the key weekly moving averages had the bounce for the Dow. Let it be known the previous week high, we sold back down. We kept testing that 27,000 mark, and we sold back down. And we did. And we made a lower low to the weekly moving averages. Not only did we do that, we have a lower high in the Dow. Yes, it recovered at 26,428 late day off of the 10-week moving average. The most important one, that when that thing dipped below that moving average, that 50-week moving average, we open up and we go back below these 50-week moving average right here on that Dow, and we break below that 10-week moving average at 26,000. We go a lot lower, down to 25,500. These markets are due for a shakeout, and they haven't had that big shakeout, and that shakeout is coming. Shakeouts provide new opportunities at lower price levels in markets. And with those big shakeouts, with the new division between the economy that we live in today and how the virus has changed it all, and different business models and different companies, that will continue to benefit. And those stocks will be viable big time on their pullbacks. You don't want to chase highs. You don't want to chase markets. And that Dow made a lower low this calendar week and tested those weekly moving averages. So if this bull run in that Dow is going to keep going, you're going to have to get above that 27,000 mark. And until that day happens, we're not in that big bull recovery. Until that happens, what we are in is a trading range. Either we get above those resistance levels, or we break below the weekly moving averages, and then the selling starts bigger. So as we start out the new calendar month, which is going to be Monday, we're going to see if new money wants to enter on the first week of August, or does the bigger money say, hey, it's time to get out, take some profits? There's a lot of bad economic data out there. Do not be fooled in this update, I'm telling you. And GDP, all of these numbers. Markets have a big disconnect with reality. Exuberance has a big disconnect with reality. Look, this bull run has a little bit of hope. And the only hope it has is how it builds above the 50-week moving average on the weekly chart. We close below that 50-week moving average, the Dow will go lower. It got a pop off of the bottom.